Hi everybody, I hope you're staying healthy, not too worried, and taking advantage of the massive volatility in markets. Let's preview what to look out for in the week ahead in financial markets. Remember, please click the like button and follow us if you find this video useful. We really are in unprecedented times. There are always bull and bear markets and we have to keep a level head. But when you see oil crash 24% in one day, the biggest drop since the Gulf War, Germany's DAX index dive by 10%, a record intraday drop, then you know this is a unique time in the history of markets. There are only two things markets care about right now: the coronavirus and policy accommodation. We will undoubtedly get lots of both this week. Sharp rises in COVID-19 cases in certain countries, especially America, are likely to garner attention, and we also have interest rate decisions from the Federal Reserve, the Bank of Japan, and the Swiss National Bank. But before I discuss these in more detail, let's preview the most important releases from the economic calendar. In a sense, we could chuck the economic calendar in the bin, because none of the data is up to date enough to consider coronavirus. Nonetheless, when markets are panicked, data could help sway sentiment one way or the other. I've highlighted the data points that are usually important, but really the monetary policy meetings are the only things likely to move markets. The first point to make about all the central bank meetings coming this week is that the message from stocks entering a bear market and havens like gold, the yen and Swiss franc soaring is that what governments and central banks have offered so far is not enough. That was most evident after the ECB meeting last week. It was a long way from Mario Draghi's whatever it takes. First and foremost is the Federal Reserve meeting on Wednesday, March the 18th. The markets have priced in another 50 basis point cut, on top of the emergency 50 basis point cut. With interest rates currently in a range of 1 to 1.25%, they have room to act, and it would be a huge surprise if they didn't. It doesn't feel too bold to say that the US interest rates are probably headed to zero for the first time, and it could even happen at this meeting that they cut by 1 whole percentage point or 100 basis points. The other consideration is asset purchases. The thing there is that the Fed is already buying bonds to add liquidity to the system. So all you could really do is call it QE and increase the amount. The Bank of Japan have already hinted that they will increase ETF purchases. They might even start it before the meeting officially begins on Thursday, and that should be yen negative. But I suspect the yen ultimately keeps gaining because it is a haven. The Swiss National Bank is an interesting one. They are desperate to stop the franc gaining because it adds an extra layer of pressure on Swiss exports when, like everywhere, Switzerland is already going to be affected by the coronavirus. The SNB are already intervening, but I don't think it will be enough to push the franc lower. I suspect the SNB can only try to match the ECB with no interest rate cuts and more asset purchases. Well, that's everything for this week. Please join us again next week for another video.